record. What's up, y'all? Let's go, yo. Let's go. So look, we're going to talk about today is how to stay in trades longer, how to squeeze more profit out of your trades, how to be part of hashtag no trim gang, because Friday was a prime example. Friday was a prime example. We're going to pull up SPY. We see that drop that happened. And Zay called out those puts, and they ended up going like what, six? I remember seeing 601%. I think they ended up like 800%. 800% on the put trade that was called out. And now imagine, if you will, for me, imagine if you will, that you never took profits at 20% on that. That you didn't take profits at 40. But that you stuck in and held all the way through with your full position. People say it's crazy. It's not. And of course, you could have got out, got back in, got out, and got back in. That works as well. So what we're going to look at today is looking at overall how you can add different things to your charts, to your trades, different ways of managing stuff so that you can, again, maximize profits. Because that's what I'm talking about when I say no trims. Instead of taking off, say you get 10 contracts. Instead of taking off some at 20, some at 30, some at 40, some at 50, and then you leave one or two, and those one or two go 200%. And then you're like, damn, if I had just held all those contracts, right? This is a way that you can squeeze more out the trade. And there's nothing wrong with taking profits. There's nothing wrong with trimming early. That's where that diamond hands concept comes in, but we're smart about it, right? We're not blindly holding things for no reason. There's always going to be a methodology that has to be put in place to make sure that it makes sense, right? And so sometimes you'll get the end of the stick where you go up 10% and you end up getting taken out the trade at break even, right? I always move a stop up to break even once I'm up 10%, okay? Other times, you'll be like, dang, I should have took profits at 10%, but I got nothing. But I think what you lose in that, you make up by the ones that go 200% and you're still in all your contracts, okay? So let's get to it. First thing, trailing stops. And I'm talking about percentages, right? So this is going to be a real simple concept. But basically what it is you, every 5 to 10%, you use a stop market order and you're going to move it up on your brokerage, right? So what that looks like is if we had a trade and we got in that trade at $100, right? Our premium was 1.00. We got in at 100, we go up to 1.1, right? We're up 10%. What we can then do is move up or set a stop market order for 1.0. And what that's going to do is if the premium drops back to 1.0, then it's going to automatically execute a market order, which should pull us out at 1.0. Might be, $1 or $2 off, depending on the stock that you trade. All right. So that way, anytime it comes back down, we're out. So this is going to be real useful if you're out and about, if you're, driving, if you're on the road, if you're in meetings, if you're at work, but you're still able to day trade a little bit. That way, in the case of a reversal, you're not being in that contract up 30% and then it drops all the way back down. And then you look at your phone again an hour later and you're negative. All right. So using a stop market order, especially setting one to break even as soon as you're up 5 to 10%. I like to do 10% to give it a little more wiggle room. But what that's going to do is also prevent losses. All right. So most of the time, I find, and as you hone your strategy, most of the time, you're not going to get into trades that typically go into immediate drawdown. If you're day trading or if you're scalping. And so that's going to be a lot easier when you're scalping, because when you're scalping, you're looking at the 1 minute, 3 minute, 5 minute. So you're a lot more precise. Right? On a swing trade that you're entering off of a daily chart, you might go down 10% first. Okay. But when it comes to scalping trades or day trading, again, most of the time, if we're catching a breakout or something like that, we're not going to immediately go down most of the time. Sometimes that happens to me. And when I look at the charts, because I'm looking at the charts, I can manage my trade from the chart. So what you'll do is continuously move whatever works for you. This is why you analyze your trades, but you can say, boom, I'm up 20%. Now I'm going to go in, cancel that stop market order and adjust it or modify it to be 1.1. All right. So now the premium's at 120. I'm up 20%. I've moved the new order to 1.1. And now if it drops back down to 1.1, I'm pulled out with 10% profit, right? So now my stop loss is a trailing stop loss in profit. So there's no way you're going to lose the trade, okay? So that's first thing, right? So like always, if this is making sense, put ones in the chat. Kiera is confused, ask a question. If it's making sense, put a one in the chat. If it's not making sense, put an in and then ask a question. I want to make sure you understand. And if it's going over your head, somebody who might not want to put it in because their name is going to be attached to it, think about if you know and understand order types, right? If you don't understand the different types of orders you can put in on your brokerage, then that's why that might be going over your head. So I would implore you to look into market orders, look into limit orders, look into stop orders, and whatever your brokerage is that you're using, Webull, Robinhood, Tastyworks, TD Ameritrade, E-Trade, M1, whatever, go to Google, type in different order types on, and I will go over it one more time for sure. Type in different order types for XYZ brokerage, or use YouTube, set in different order types for XYZ brokerage. So that way it can go through how to use those order types on your platform, okay? So let's go back through that one more time, real quick recap. There are videos in the Discord on how to do this. There's videos in the Discord for everything. All right, so again, the concept is setting, once you enter your trade, once you go up 10%, using a stop market order and adjusting it every time you move up 5 to 10% in profit, so that if the premiums drop back down, you're taking out in profit, right? So what that looks like on the chart is, and it might be a little better to look at that on a 1 minute, right? And so I don't have the actual prices pulled up on this because I'm on TradingView, but the essential idea we're going for here is, as the price drops, right, your inputs, as the price drops, your premium is going up, right? You're making money. And on these little pullbacks, you might come back up 5%, or it might give you away, 2%, right? So the idea is that you keep adjusting as you go down. And that's why I like using those 10%, is because most of the time, unless we're trading same day expiration, like over here, if you're using 10%, this pullback right here probably isn't taking 10% away from me. It might, but it might not. And if it does, then you'll just get out, right? But that way, you're not getting out. If you enter puts right here, you're not getting out right here because you're up 20%. That way, we're at least capturing 40, 50, right? And that's the overall point. Again, the point of this training is looking at different ways or different methods we can use to grasp more profits, instead of using a 20% target, a 30% target, some arbitrary number as a target. One, because it's an arbitrary number, unless you've looked at your data based on your entries and exit strategies and saw that that's the ideal or optimal price point for you to, or percentage point for you to take profits. And two, you don't want to cap your profits, right? If we just, again, removing your, everything else and thinking about things in a logical manner, when you're trading, your ideal objective should be, how can I make the most money while risking the least amount of money? And that's really any investment you make. How can I make the most while risking the least, right? And so when you do I'm getting out at 20% and my stop loss is 10%, you're making more while risking less, right? That's still the concept at play, but you're capping yourself, right? So if you have the flexibility to not cap yourself, why would you? Fair? Fair. Okay, so that's what we're looking at, right? So that's the first thing, is setting a stop market order and adjusting it. I'm up 20%, I'm setting a stop for 10% profit. I'm up 30%, I'm modifying that order, and now it's taking me out when I'm up 20% if it drops me back down, right? So that's looking at that, okay? Another way, we go to the 5 minute. Another way is to start using, or one of the things that I looked at is using moving averages, right? How is it different from setting a 5 to 10% trailing stop? That's exactly what I'm saying. That's not different. Hopping in the chat real quick. Yeah. That's not different. That's literally what I'm saying. Is a 5 to 10% trailing stop. So you got it. Cool. Not all brokerages have the option for you to implement a trailing stop on your option trade, which is why I got to the technical part of using a stop market order and adjusting it. So another thing we can look at is moving averages. And this is something that you can test across different stocks. You'll probably see that they have different, different moving averages that they hold as support and resistance. But for those who aren't aware, moving averages can typically the more popular ones like the 10, 5, 20, 21, 100, they'll often act as support or resistance. All right. So what we see right now is if we ended up getting inputs and our plan was, hey, as long as this stock stays below the 20 EMA, I'm staying in, right? Because we think about what moving averages help us identify as trend. And so if this stock is staying under the 20-day EMA, then we know out of the last 20 candles that are being factored in, we are still moving down negatively and the average continues to drop, which means that's the math side, which means we're still moving down. So again, the logical piece is if you enter a trade and the stock is moving in your favor, why are you getting out? Until it shows sign of it's not moving in your favor anymore, right? So when we think logically again, and we can use moving averages to help us guide the direction of a stock is heading or has been heading, then why am I exiting if I think we're going to continue to go down? All right, so you see you getting inputs. Even if you got inputs right here on the break of this support level, all right, we see the bounce here, bounce here, bounce here, close below, pull back up to it again. So even if you enter puts off of that technical analysis and the candlesticks, using that 20-day EMA or 20 period EMA would have kept you in the trade, right? And so you can look at different ones and they're going to vary across time frames. We see that if we use the 20 on the 3-minute, then we would have got out down here, which is still very good, right? Or you could have got out maybe right here, depending on how you look at it, okay? So that's using EMAs, and of course you can go and you can add different ones on there. But I would say look at them, look at them live, see which ones make sense, test them out, look at the different time frames. Again, this is all more so based on somebody who's going to be day trading or scalping, right? So you can use EMAs, and you can do this on, let's say we go to the hourly as well. Right? If you were in calls and you held calls until a close below the EMA, you would have got out down here and been in that whole time, right? So just different things you could test with the moving averages. 2 to 3 minute works better with the 9 EMA. Thank you for sharing. All right. And that's the whole point of this as well, is I do encourage y'all in the chat or in the Discord or wherever to connect with each other and share things that you've tested and share things that have worked. Okay. Now, we got EMAs, we got moving averages. This is what I like to look at is pivot points high-low. I'm not sure why my little settings tool isn't letting me edit this, but that's all right. So if we come over here, I like to look at the highs and lows because that's what's price movement is letting me know about the trend. So when we're looking at these swing high, swing lows, and all that is when you see a movement taking place, the next higher low that's in that movement or ending that movement, right? So on this move down, we see that we stop there, we move back up to here, right? We take another leg down, and on a micro scale, you can count this as well. All right, it's a little move back up, move down, move back up here, move down, move back up. All right, so you can get real granular with it, or you can, depending on, again, the time frame you're operating on, You can be like this, right? And the longer out your time frame, then the more likely you'll be in the trade longer, right? 5 minutes we would have held, going off of that moving average we just looked at. 5 minutes we would have held, 2 minutes we would have got in and out. But again, you can always again test different moving averages on different time frames. So looking at the 3 on SPY, right, we see with these move down, move up, move down, move up, we got a retest right here for that resistance. All right, but the key point is we're continuously making lower lows and our highs are lower as well. All right, so we have a high here, come down, we make a new high right here, right? Because this is a high after this low, this is a new high, come down. This is a new low, this is a high, right? But this high right here, this swing high is lower than this one, all right? So that's why we get lower highs. This new swing low, because our next leg down, swing down, move down, whatever terminology you want to apply there, this next swing down or swing low is lower than the previous, right? So what that's telling us is that the sellers are still in control. We're still heavily moving to the downside, and it's not letting up, right? When the buyers start moving back in, they're not moving in with enough power to get them back to these previous levels. That's how we end up with lower highs. All right. So using those highs and lows is what I like to do the most when I am scalping or I am day trading and I'm sitting here watching every candle come through. I like to do that the most of the time to stay in my trade. Because again, the concept that we're trying to apply directly to our trading is if the stock is moving in my favor, why am I getting out? Why wouldn't I allow it to continuously run, right? And when you talk to more beginner traders or traders who are just now getting used to trading actively, the biggest thing that you see, or one of the big things that you see causes people to be unsuccessful, is they do this with the losing trades. And they allow the losing trades to run on and keep staying in loss or keep dropping. And then the winning trades, you get so excited, you're up 10%, 15%, you close it. All right, but losing trade go down 10, 20, 30, 40, 50. And it's like, man, I hope it's going to turn around. I hope it's going to turn around, right? So we want to avoid doing that as well and want to flip those roles so we can stack those winners and let those winners go crazy. And the losers, you can cut them quicker. Okay. Are we good so far still? Ones in the chat if we good. Ends in the chat if you're confused. Somebody one day gonna say, why you do a number and a letter? Why wouldn't you just do Y and N for 1 or 2? I don't know. Jordanisms, right? Roro says, stop talking about me. It's not just you. It's a lot of people. I think I don't want to say everybody goes through that. But I think the vast majority of people go through that experience of letting losers go on, staying in losers, and getting so excited with seeing a winner for once. They don't want, out of the fear of a winner turning into a loss, they quickly close them. And out of the hope that a loser is going to flip, they let it keep going. But you hustling backwards, as they say. At what time frame did I get into a trade? I didn't day trade on Friday, if that's what you're asking. I know Zay called out this trade. Friday, I wasn't trading. Learn to switch the roles. Cool. So that's making sense. All right, cool. And the last one, and there's always others. I mean, because you can do the same thing with a ton of different indicators. And you could throw a MACD on, you could throw a RSI on, you can use an ATR, you can use all type of stuff. You can throw a Bollinger Band on. Bollinger Band isn't gonna help you stay in. No, because you should be using the moving average. Not gonna help you stay in the trade. But like for example, with the MACD, All right, something you could do is as long as you hold below the 0 line, you can stay in the trade. Right. So we see we didn't break above that 0 line on the MACD. You stay in the trade, which we haven't broke 0 since over here. So yeah, you would have been in the whole time if you were simply basing it off of the MACD. We look to the call side. Over here, we cross the 0 line on MACD. And if you were going to use your exit as crossing back below the 0 line, right, you would have stayed in the trade all the way up here to the peak at 419.90. Right, you would have stayed in that. So, again, this is something that you can start testing out. If you got in calls back here as well, right? You didn't cross the 0 line, you would have stayed in that trade. And then you can start applying different things. You had a bearish cross here, or you were overbought and had a bearish cross, right? So you could take that as your exit. You combine those two indicators. So that's just to show different ways you can apply stuff. And although I don't usually use any indicators on my chart, I still learn them, and I don't try to force nobody to not use indicators. Use what makes you money, use what makes you comfortable. All right, we do this to make money. So you can do that as well. And then we're going to look at the Heikin Ashi candles for sure. I got to put that on there. What do I use if not indicators? Price. The same way I was just talking about those highs and lows. That's it. Price, chart patterns. Yo, candlesticks. That's it. So let's flip over to Heikin Ashi. Okay. So Heikin Ashi is a little interesting. And their candles are calculated differently and all of that. But again, depends on the time frame you're using. So if you're looking at Heikin Ashis, one of the things that I've tested out as a potential way to stay in trades is waiting on 2 candles of the opposite color, or getting out when you have 2 wicks back to back in the opposite direction. So what you'll notice on Heikin Ashis is that when the trend is really strong in one direction, those candles will print without wicks in the opposite direction, right? So in this downtrend example here, we see that these 4 candles don't have any upper wicks. And in this uptrend, we see that the majority of these green candles don't have lower wicks until, right, we get these wicks and we start turning red, and then we eventually flip over. All right. So you can use those as well. I can repeat that too. Yep. We can use those as well to stay in trades. Again, you can keep in mind that, you can get out of trades and re-enter. So there's nothing wrong with taking profits. I will say that. But you can always re-enter, and you should re-enter if you think there's going to be a continuation. All right. So looking at the Heikin Ashi candles, and we can apply that 2 opposite color rule. And then you would exit on this candle close here after capturing this move down. If you got back in your puts for the continuation off the reject, then you would exit on this candle here. And then once you got back in off this rejection, or if you got in off this new low being formed, then you would have stayed in the rest of the time, because we didn't get 2 new green candles, right? We continued having red candles. We continue to have no wicks. And then I think we got 2 candles that wick to the upside right here. So you could have got out there, right? So those are different ways that you can stay in the trades longer. Again, to recap, using Heikin Ashi candles, looking at candles that are printing and closing with no wick in the opposite direction is what you want to see. And then once you start getting 2 wicks in the opposite direction, or 2 candles of the opposite color in a row, then you might have a trend reversal coming up, or you might just end up in consolidation, right? So using Heikin Ashi candles, pushing out your time frame can help you stay in as well. So if we go from the 5 to the 15, we can go to the 10, right? We see we have even less green candles show up. And if we kick it to the 15, we only have 1 green candle show up. So if we traded this off the 15-minute, using that Heikin Ashi method, with the green candles being our exit, then we would have got the entire move. right? Entire move would have been captured if we were waiting on green candles to be an exit or candles of the opposite color. All right. The other thing is using the pivot points high low or just using the price, but I found this indicator puts the price right there for me. So that's why I use it. And that's just going to print those high and low plots for you. So you can confirm whether or not you're making higher highs and lower highs or where the highs and lows are coming in. Because once we start getting higher highs or higher lows, then you might start moving up, right? Because the price is going higher. Once you start getting higher price, then you're moving up, right? And when you're starting to get continuous lower moves, then you're moving down. So I like to look at that as well to stay in the trade. As long as we're still making lower lows, I'm staying in the puts because every time the sellers come through, they push it lower than the previous low, right? So we're breaking past any potential resistance or support to the downside when we're talking about those lows. And then you had the moving average, which is something that you can switch around based on the time frame that you're on, right? So you can look at different moving averages, look at different time frames. So looking at the 9 EMA on the 2-minute chart and seeing that it held as a resistance here, held as resistance here as well, and then it closed above right here. All right, so using the 9 EMA to keep you in the trade, you would have gotten out down here versus, getting out up here with a quick 10%, 15%. All right, and then you could have re-entered again off a support break or however you want to do it. And just using those different methods to stay in the trades. And the last one I showed was the MACD. And when the MACD crosses back over the 0 line, which is here, when it crosses over that 0 line in the opposite direction, then using that to get out the trade. So not sticking to solely the MACD and signal line crosses, which are down here, those blue and orange lines, not just worrying about those crossing over a bunch of times, but allowing that cross above that 0 line to be what pulls you out the trade. All right. So if y'all got questions, fire away. We got about 15 minutes left for questions. So yeah, if y'all have any questions about any of that, please shoot them in the chat. Hopefully that all made sense. Hopefully I could see y'all in a group talking about no trims. But realistically, the whole point is, making more, right? If you don't have to trade every day. You don't have to trade multiple times a day, right? And if you could choose between 5, 10% trades and 150% trade, you would go for the 150% trade, right? Instead of 5, 10%ers, right? And so this is how you turn this 5, 10%, 10% here, 10% here, 10% here, 10% here, turn that into 150%, 50%, Let's scroll through the questions. Now, that's a strategy I can follow. That's good. What do you personally use yourself? I use the high and lows. I use the highs and lows and the Heikin Ashis. But that's it. And if you've ever watched my live tradings or you hopped on my live trading Zooms, that's what you'll see me do is look at highs and lows with price and look at Heikin Ashi candles the same way I just showed y'all. I'm not going to show y'all nothing I don't do or haven't tried or haven't done. Swing trading, how would you know to stay in a trade multiple days? You can apply the same stuff. With swings, we got to look at how long do you plan on being in the swing in the first place? Are you doing a 2-day swing? Are you doing a 3-week swing? But if we look at the 1 hour here, right, we see it still applies. We get inputs. We get inputs off the trend line rejection. Trend line rejection up here. And we're waiting for a cross back up to the upside over the 0 line on MACD. You see it still holds. All right, it rejected that 0 line on the MACD, so you would still be in it. You can do the same thing with the moving averages. All right, so that's something to test because all the stuff is based off of price anyway. right? I'm gonna put the pivot points, high lows too. Right. So we see on the 1 hour. See if I can change. It's not. There we go. And so if you want to, what you could do is just let the pivot points plot. And that can help you as well because you're going to be looking at highs and lows differently. But when they plot, right, you see that we have this low, this low, this low, this low, and now we're making a new low. All these lows that we're getting have continuously been lower. This high, 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 this high from this day, which really never came. Right. All these highs are getting lower as well. Right. So you can let them just plot out and you can use that. So it still applies. Everything that we just looked at still applies across the swing trades or across different time frames. Right. Depending on your entry here, you get no green Heikin Ashi candles until down here, 2 in a row. All right. Well, questions we got. What about stochastics? You could look at the stochastics with it as well. Probably the slow stochastic because the regular stochastic will probably shoot off a lot more signals though. Do I ever suggest buying more contracts on the way down? I personally won't buy. So again, I can't stress enough breaking down your trading to the most logical, simple way possible and directly applying the concepts that make sense to your trades. All right. So if you get in, if you buy calls, let's flip back to regular candles so it's easy. If you buy calls on this day, all right, say you got a month out or a week out or whatever. If you buy calls here and it's going down, and I don't know what other type of method you want to use. We see that we have higher or lower highs. We see that our lows are getting lower. So you probably wouldn't want to get calls anyway. But if you did, and then it gapped down right here, why are you buying more? Like there's no reason that makes sense logically to buy more calls as the trade moves against you. And when you start removing, like, you got to remove it from trading, remove your investment, remove it from trading. If you were watching a fight, right, Conor McGregor and whoever, if Conor McGregor was your initial bet and Conor McGregor starts getting his teeth kicked in, you're not going to sit there and throw more money on Conor McGregor as he continuously gets beat up. Wouldn't you? You wouldn't, right? It's clearly going the other way. So cut your losses if you can, or you could just hold steady, but you're not going to see Conor McGregor getting whooped and throw more money on them. If you betting on a basketball game and the score is Lakers 50, Mavericks 25 at halftime, and you originally bet on the Mavericks, and someone says, hey, you want to throw more money on the Mavericks? You're not going to say, oh, man, the Mavericks are down 25. Yeah, I'll throw more money. No, no, right? So by the same token, if you're in a trade and the trade is clearly going against you, don't add more money. That's just not, I don't think it makes sense if the trade is going against you. Now, if you're down percentage wise on the P&L because of consolidation, then that's different, right? So consolidation would be, we bet on the fight and it's, the score every round is tied, or we bet on the Mavs and the Lakers, and the Lakers and Mavs are tied at halftime. You know what I'm saying? They tied, or the Mavericks are down 5 or whatever. Okay, I'm chilling. You know what I'm saying? So if you're still seeing, oh, well, Luka's been doing good, or the Lakers are getting tired or whatever, right? You still see indication that the trade is going to go in your favor, then yeah, I could stay in and I might average down, right? But like I said, with those other examples, if the trade is clearly going the other way, it doesn't make sense to add money to it in my opinion. Yeah, D Wiz just got off, but D Wiz asked, "Do I personally enter a trade on the Japanese candles, then switch to Heikin Ashi?" Yeah, so I don't enter my trades off of Heikin Ashi candles, but once I enter the trade, then I will switch over to Heikin Ashi sometimes to manage the trade through the method I showed. Is there a way to learn what contracts to buy? How do you know what are the best contracts? So when it comes to contract buying, I think the if you're going to find a way to identify a best contract, which I think can exist unless you can see the future, right? Then I would say you can start diving deeper into the Greeks. But the reason there's no best contract is because you don't know where price is going to go and how fast, right? So our options, we're going to be looking at two of the main factors with options and pricing for options is price of the underlying and the time, right? So the best option, if we're going to get a quicker move and it's a larger move, if we're looking at ROI as what determines best, will probably be something that's further out of the money and a shorter expiration if we're getting a quick over exaggerated move. But if we don't get a quick over exaggerated move, we get a little slower move, but it still comes all the same, then having an expiration that's an extra week out and closer to the money at the money, or maybe even in the money, would have been the better contract. All right. So there's no way to say what contract is the best contract at time of purchase unless you know how fast something's going to move and how big it's going to move. All right. But for me, typically, because the way I trade usually is quick, and I don't sit and look at the numbers on the Greeks for every single option I trade. I usually go at the money or one strike out. And I usually get, if I'm swinging it and it's going to be a swing, however long I think the trade is going to last, if it's going to be a swing, I usually get an extra week. So if I think a swing is going to take, if I think it's going to take 4 days to make the move I'm looking for, I'm going to get an extra week. All right. Um, if I'm day trading something, usually one strike out or at the money, so I don't have to worry about, it getting messed up because it's moving too slow towards my strike price. You do some back testing with those methods you share, looks solid. Use the MACD for puts. Yeah, test it out. That's the other thing. Test everything I'm showing y'all. The way I've come across these things is from testing. So even though I don't use indicators on my chart actively when I'm trading, on the weekends or after hours, I will come on here and I will throw indicators on sometimes and see if there's anything going on. That's also because I'm working on trying to create my own indicator on TradingView. That'll be a strategy that's just easily applicable. You can just follow along and make money with. Somebody with low capital account, $500 to $1,000. What do you think their stop loss should be as soon as entering the trade? 5%, 10%. That's going to depend on how much. It's going to depend on your trading style. It's going to depend on how much you're willing to risk and what's your position sizing, right? So the way I always break it down is if you know up front, you don't want to risk more than 5% of your account per trade, then that's going to look different based on the position sizing you use. If you put your whole account on a trade, your stop loss better be 5%, right? But if you put half your account on a trade, then you can use a 10% stop loss, right? And it goes on from there. If you put 10% of your account on a trade with a 5% total account stop loss, and you only put 10% of your account balance on the trade, now your stop is whatever, somebody knows. It might be 50%, right? Or matter of fact, easy numbers. Sorry, it probably was 90%. Easy numbers. If you know you only want to risk 5% of your account per trade and you put up 5% of your account on a trade, right? You can lose the whole thing and still be within your risk parameters. So that's where you got to look at your risk and your position sizing for what you're doing. I said, poor Connor. Unmute Moody, Jordan. I ain't even know Moody was here. I'll unmute Moody after I'm done answering these questions. I got you for sure. I got you for sure. I gotta stay locked in because I gotta go in 5 minutes. What would you see a reversal on the 5-minute time frame? Good question. What time frame? What time frame is best for reversal? You're gonna see the reversals across different time frames. Right. So again, it depends on how you're trading. Are you trading swings? Are you day trading? Are you scalping? You know, every time frame bleeds into the next one. So before a full reversal comes on a daily, it's going to show on a 4-hour. Before the 4 is going to show on the 2. Before the 2 is going to show on the 1, 30, 15, and so on and so forth. Right. So the smaller your time frame, you'll be the first one to see the reversal, but you'll also get faked out more often too. Right. But when you start kicking out to bigger time frames, you'll catch the reversal as well. You'll just be later because you're on a larger time frame. All right. How many candles of opposite color did I say to get out when using Heikin Ashi? I was looking at using 2. Yeah, exactly. So buying more contracts. Oh, on the way down. Okay, yeah. So I don't have a problem with buying into or averaging up on a position. I don't have any problem with doing that. Right. So averaging up would be you're already in profit because we got puts on this support break and we're already in profit. But then we come and get this support break right here and we get in more puts. Right. And then it keeps going down and then it breaks support again and we get in more puts. And then it breaks support again and we get more puts. Right. And we just keep on going up. So we're adding to the trade because we're still running up and the trade's still going. So it's really just a matter of basing it on the candles itself and trying to get a little further away from basing it on the P&L of my account or that specific trade, because that's going to vary, right? Candles don't care where you entered and exited at, you know, as far as like your actual account percentage. But if you see that this is rejecting right here, then yeah, that's a good trade, even if we weren't in the whole trade. So thinking about it as a separate trade, this downtrend resistance rejection, that's a good trade to take, right? Even if you scalp it back to this level here, that's a good trade. What setting do I use in the pivot point high low? I usually do 5 or 3s. Moody said him just listening today. He done got off, didn't he? He got off because he wasn't finna run the class after I. Last question. What is price action? And how does it affect you with your trading? Zay talks about it a lot. I'm wondering how it's to you. Price action is price, right? So price action is price movement, different ways price interacts, different orders. Like that's all it is. So looking at price, breaking it down, looking at the supply and demand zone, support and resistance, trend, candlesticks. Typically, when people say price action, I think more so of like an overall bigger picture, like what is price doing? What actions is price taking? Well, price is continuing to move down after a pullback on the 1 minute. Is continuing to move down, continuing to make lower lows and higher, or lower highs and lower lows. It's continuously rejecting the 411 area, and then it also rejected 410, 60. Like that's what price is doing. So that's what I think about with regard to price action. When I say price action, I just mean anything candlesticks. So, but to be technical, this is price action as well, right? It's price, and price is acting, right? Cool. I think that's it. All right, that's it. So I'm gonna stop this recording.